Welcome to episode 7 of Price Action Trading series from Market Secrets. In this episode, we are going to learn about supply and demand imbalances created by continuation pattern. There are two types of supply and demand imbalances. One, valley and peak, which is called extremes. Two, continuation pattern, otherwise called as CPs. In the last episode, we focused on extremes, which is valley and peak. In this episode, we'll be focusing on continuation pattern or CPs. So, let's begin. What is continuation pattern or CP? A CP or a continuation pattern is a pause in the market before price resumes the current trend. In an uptrend, it requires a rally followed by a base followed by another rally. In a downturn, a CP requires a drop followed by a base followed by another drop. So this rally or drop is otherwise called as legs. Legs in and legs out must be ERC candles or failed ERC candles. The bars in the CP base can have any color. A CP is a pause in the market. We can think of this pause as an accumulation of buy orders for longs or the distribution of sell orders for shorts. There's a very important note here. Locating and drawing CPs can be very tricky sometimes. There are as many variations as there are colors in the light of spectrum. Don't get obsessed with having all of them right. Sometimes there will be valleys or peaks, or it's just a mess. Your trading decision and trend analysis can change if you don't draw them correctly. This is part of trading. Unfortunately, most of the times charts do not look nice and clean with great formations as described and shown in the examples. This is hard and true reality. The sooner you come to grips with it and accept it, the quicker you will learn. Having said that, nobody forces you to trade messy formations, as there are a lot of instruments to trade. Furthermore, part of tradability scoring of supply and demand zone that will increase the probability of trade, which I'll show you later, comes back to this subject. Nevertheless, you better get used to the fact that you just can't control everything and accept that you will always be making mistakes. It's part of the game. A continuation pattern is composed of these two formations. First, rally, base, rally. So if you look at here, there's a good rally here, which is your first leg, followed by a base here, which is your second leg, and followed by another rally. So these kind of formations where you see a rally, base, and a rally is called a continuation pattern. Likewise, there is another variation here, which is called as drop, base, drop. So if you look at here, the price was dropping and then it formed a base and then it started dropping again. So this is a drop followed by a base followed by a drop. This is another example of continuation pattern or CP. So there are totally two variations. First one is a rally base rally, which is for an uptrend, and second one is a drop base drop, which is for a downtrend. Now let's talk about different features of a CP. Number one, CPs are best for momentum trading when trading with the trend or bouncing off of a bigger time frame. Number two, trading CPs is a low odds opportunity when the trend line is broken on the time frame it has been located on or a bigger time frame is in control. Number three, trading CPs is a low odds opportunity when the price has been running for a while and more than 3 consecutive continuation patterns have already been formed. So if there are 3 CPs already in your chart, don't take the fourth CP. It is a low odds opportunity. And finally, trading CPs is a high odds opportunity at the beginning of a trend change or at potential reversals or after a wow trade that goes with bigger pictures trend and momentum. I'll explain this in detail in the forthcoming episodes. Please note that some of the things mentioned here might be very new to you. Please do not worry if they are not yet clarified. All this will be taught in the later episodes. Please also note that you will come across such situations in almost every episode, but again, it will be taught later. The further you advance, the more things become clear and the puzzle pieces will fit together. Therefore, it is important, and I cannot stress this out more often, that you go through this course over and over and over as mentioned in the first episode. Every level is different. Imbalances don't occur in perfect formations every time. You need to read candle by candle. Sometimes it is very tricky to distinguish a CP from a valley or a peak. In such cases, you must carefully read price action candle by candle to see the clearer picture. If the zone is not clear to you, the wisest thing you can do is wait for confirmation. And again, there are multiple types of confirmations, which will be explained in the later episodes. Now, coming to the assignment part, open your chart and mark at least 10 CPs each for rally-based rally and drop-based drop. Hit the like button if you have learned something from this video. I request your feedback and queries about this episode. Please leave it down in the comment section. Also, share the link to your assignments in the comment section of this video. Subscribe to our YouTube channel and click the bell icon if you haven't done that already. And please share it if you find it useful. Thanks for watching. Have a great day. Goodbye.